Hey traders, checking in on the cryptocurrency space. Bitcoin is in a key tightening daily range, the break of which is going to dictate momentum heading into October. We've got a handful of patterns to be watching. We've got some falling wedges, some head and shoulders, some rising wedges, and we're going to check in on the Trader Pro platform for some alerts that have been working well in the recent past. So here's the Bitcoin daily time frame that we're keeping an eye on, and in the short term, it's the bulls attempting to change the daily trend back in their favor. We've got our low of the dump, high of the bounce, higher low, which was a double bottom, and now we're watching for the potential of a lower high, anything under 45.2 thousand. It's possible that we trade within this tightening range for another few days. We've got 4 more days left in the month, and it's entirely possible that early October is when the break does take place. We've got the daily EMA 12 rejecting the price as something to be keeping an eye on. And again, bigger picture, we are watching a tightening equilibrium, and we're scouting a higher low on the weekly, but we have to confirm a daily trend change for that weekly higher low to be established. I like the 2-week time frame for clarity more than the monthly at this point because of how quickly things are developing, trading 7 days a week. And right now we're looking for a 2-week higher low compared to 28.8 thousand to trade within this tightening range and set up an equilibrium potentially into the end of the year. So scouting the higher low and watching the tightening range. So while this range is tightening, we ideally either want to just be trading on longer term time frames, trading altcoins to take advantage of the more significant volatility in both directions, or patiently waiting. We don't want to be over trading Bitcoin itself while it's in this tightening daily range. And for me personally, I have a swing position. I didn't intend on it being a swing position, and it was just from, honestly, I didn't intend on taking the trade, but it was right before leaving to hit the road for 6 hours, and it was this drop that we saw back on the, right here, the 24th, and just a straight waterfall drop. In the last video that we checked in, I was highlighting how the key breaks of psychological levels on Bitcoin were leading to notable bounces. The break of 41 led to a 7% bounce. The break of 40,000 led to a 10% plus bounce. And this was an example of, again, I was not planning on trading, but it just absolutely flushed. In the 5 and the 15 minute RSI got down to extremely oversold conditions. And this is what I was saying when it was happening. 5 and 15 minute RSI extreme with 41,000 psychological break. I'm making an entry here. They're making fun of me because I said I wasn't going to trade, but the psychological break signal has been too good recently, and I'm still at the computer for another hour. So I would have just been looking for it to be a day trade, but what I did was make my entry on the break of 41,000, filled at 40.9. I sold half on the initial bounce within the first 20 minutes, and my break even was then 40.5. I sold half at 41.3. So I just set my stop at break even and just let it play out. So I now still have that position, and I just have a break even stop. So that's one example where I knew I couldn't be at the computer for 6 hours. I knew I wasn't going to be monitoring closely over the weekend over the last few days. But when you position yourself in a risk-free scenario, you set your stop loss, and that's it. You don't have anything else you need to do. And hopefully there's a bonus. And when you're ready to hit the charts again, the price is up. And worst case scenario, you're stopped out break even and back into cash. So I'm just going to keep holding this. If this equilibrium breaks bear, I will stop out, risk-free, break even. And if it breaks bull, I'll have a great swing position for the potential that we just set our weekly higher low. So I still also have positions, swing positions in Bitcoin and Ethereum from this monthly higher low that I'm letting play out. But that's just an example of using short term. Again, the only reason I make that trade is 5 and 15 minute RSI aligning with a psychological break. So multiple things happening in conjunction with each other to give myself confidence in a decent probability of at least a short-term bounce. So just a little trade example. Other than that, Bitcoin dominance chart, we're watching here because there's a shift attempting to take place. And if we see this daily trend change with a bull break of 43 and 43.64, we will then be negating a potential weekly bear flag if we get some follow through on that break. And we'll be watching for the potential that our monthly double bottom is going to hold and see some bounce follow through. And again, if that happens, the probability of the last year and a half favors that would happen on cryptocurrency weakness. where if Bitcoin breaks this daily equilibrium bearish and the altcoins drop faster, the dominance chart goes up and breaks these resistances. So if I'm a crypto bull, and if I want the pattern that I've been comfortable with of the relationship between alts and Bitcoin to remain the same, what I want to see is an inability to break 43 and a drop down to break support here of 40.98. And that would show me that we are likely breaking the equilibrium bullish. Again, there have been short-term scenarios where brief periods of time, Bitcoin has led to the way up for the bulls, but it is not notable. And everything will go out the window if there is an ETF that gets approved as far as the relationship between Bitcoin and altcoins that we've been used to for the last year and a half. But in the absence of that, I'm just sticking with probabilities. I live my life by probabilities and I trade by probabilities. And if we've seen the same consistent pattern where Bitcoin dominance being down generally is showing us the crypto space going up and altcoins going up faster, if that happens 85% of the time, that's how I'm going to continue positioning myself until that relationship changes. So just keeping an eye on the dominance chart to give us any clues, but it will likely be this daily tightening Bitcoin range breaking, which dictates whether the dominance chart breaks bull or breaks bear. ETH/USD also tightening up. We came right up to resistance and rejected. So low, high of the bounce was 31.82. We double bottomed here as well. And then we double topped at the resistance level of 31.82. So here we are right back into our tightening range. Bulls can be looking, how we trade within equilibriums is we wait for the price to approach support and we make entries. And I can have a bias. Let's say, okay, I am confident that a weekly higher low is going to form. So how do I position for that? Well, on this current pullback, I can make an entry and put my stop under the low. If I want it to be a tight stop and use a larger position, I'm going to use this double bottom. If I don't want that level to break and then go straight into a bounce and stop me out, I'm going to use a smaller position and use the lower level. But if I have a bias of a weekly higher low, I'm trying to make entries where the risk and reward is smaller, which means closer to support levels and the levels that I'm going to be using as stops. So if I am looking for a position right now as a bull, I want to see further weakness and I want to see the price get closer down towards that support. Same thing as a bear. If I think we're about to see another leg down, I want to be top fishing resistance, having a good risk and reward scenario to try and position for that possibility. If I have no idea which direction it's going to break and I have no lean one way or the other, then I can patiently wait for the break to take place. These are just examples of different ways to position yourself as a swing trader based on what you feel is the most likely longer term scenario while trading within a daily equilibrium. ETH/BTC, nice 4-hour falling wedge. We have a key back test here. And if you've been following along, you remember that we've had some key falling wedges break bull and then fade to back test the previous resistance and then act as support before we get follow through. So this was just a pattern I was keeping an eye on and we broke bull. And if we back test this level and keep pulling back, we need to hold it. And Litecoin USD is a name that comes to mind for me that did that exact same thing. It broke the falling wedge bullish. It back tested the downtrending resistance, now support line, and then it got follow through. So it's a bull break that's lacking follow through at the moment. And we need to see a 4-hour higher low and then continuation from here. And again, if we see that happen in ETH/BTC, we're going to be dropping down most likely on the dominance chart, heading down towards support. So if I am confident in the cryptocurrency bulls, I want to see ETH/BTC leading the way. And I want to see other altcoins leading the way as well. That's the style of trading that's worked for me in 2021. And I know a lot of other traders where that has been the case as well. I know a lot of people out there don't see that relationship between alts and Bitcoin. And I honestly, the only way that I can think that they're not recognizing that pattern is they're not looking for it. Maybe they're just going off by their memory. But if you back test the data of the last year of trading and look at the dominance chart and what it's doing and what it's doing when the cryptocurrency space as a whole is going up versus going down, I really just don't see how you can have the opinion that Bitcoin going up and altcoins going up slower is what is the most bullish thing for the crypto sector. Sol. So Sol USDT volatility is coming. And we know volatility is coming for the entire cryptocurrency space when Bitcoin breaks that tightening range. But even more so for Sol, with our low, high, higher, low, lower, high. So an equilibrium, a weekly higher low is the most likely scenario after the big time breakout. It's just a question of, do we set that higher low at 116 or do we need another leg down to test the EMA 12? But why I'm so interested in Sol here, aside from its clear daily equilibrium that's tightening up, is the Sol BTC chart has been in a much longer equilibrium. Remember the last time we saw an alt BTC pairing in a long drawn out equilibrium? I do. It was Ethereum. It was right here. And it led to a Mondo break. Doesn't mean it's going to Mondo break bull, but it means we can expect volatility when it does break. This was tightening up for almost 9-10 days. And here's Sol BTC, which is now on its 10th and 11th day. Watch for the break here. It's possible that the BTC pairing breaks first and gives us direction as to how the US dollar pairing is more likely to break. So if we see the BTC pairing break bull first, that increases probabilities for me that the USDT pairing will break bullish as well. So again, it's another scenario where, do I enter on the bull break? You can, but I just don't love the risk and reward of entering on that bull break. If I did, I would be selling a partial position fairly quickly to lower my cost basis and my break even. The best risk and reward entries are determining, okay, well, we're expecting a weekly higher low after this breakout is the most likely scenario. Maybe I'm going to make an attempt for a daily higher low top fish. We drop down within $10 of support. If I make an entry and I stop out, I lose $10. And if we do not stop out and we change the daily trend, then my risk and reward greatly favors reward. It's a $30 move to break bull versus a $10 move to break bear. So the lesson of the video so far is use the longer term time frames, most likely scenarios, to determine how you are positioning yourself in swing trades on the shorter term time frames. And when you don't have that clarity on the longer term time frame, you're either using smaller position sizes or you're waiting for that clarity. But on something like this for the weekly on Sol, we know a weekly higher low is the most likely scenario. What we don't know is whether or not 116 is going to be that weekly higher low, which is why we still use stop losses. It's possible that 116 breaks and we drop down to 98. And we don't want to be holding a bag if that happens, but we determine the longer term most likely scenario and position ourselves in low risk, high reward. Just got stopped out of some Tesla into the end of the day. Position ourselves in some low risk, high reward scenarios for when the longer term most likely scenario takes place, and we win because of that. So keep a close eye on Sol BTC here for the clues. Multiple weekly inside bars, and we just started this week, so we are likely to break that this week. And Sol BTC or Sol USD has been giving some really nice signals on the Trader Pro platform. Again, traderpro.com. And this is just the super stack alerts. We recently added 5-minute time frames and back burner as a signal, but we're in an environment where back burners aren't occurring. Why? Because we've been consolidating for weeks and we're not coming from highs. Remember, the key for back burners are you're coming from a breakout, whether it's all-time highs or just a significant bull move up. That has to be the prerequisite for back burners to be on the table. So we're not in a market environment where back burners are happening, which means we go to our different signals. So back burner out the window, unless we're breaking out first or breaking down first and looking for bearish back burner entries. But now that that's out the window, we can focus on super stacks or extreme overbought and oversold climaxes. And for the super stacks here on the hourly for Sol, we can see when the hourly super stack signals in oversold conditions, we generally see really good entries for bounces. And even the ones that do drop to lower lows, they bounce enough to allow for positioning for low risk. So we're in a market environment where, and again, this is a good sign, even if I'm not taking these trades, let's say I'm a swing trader right now on Sol, I can look at this and say, okay, it's a good sign to me that hourly oversold conditions and the super stack alert is firing and we bounce from there. The last thing a bull wants to see is these bounce signals fire into bear flags. That shows us weakness. So if I'm just wanting to check in on a swing position that I have, I can say, okay, good. We're still seeing bulls buy oversold shorter term conditions, which makes me more confident in the position that I currently already have. And obviously there's a lot of day traders that use these bounce signals for their bounce entries. Sushi USDT, a lot of volatility. What's been standing out to me in the last couple of months, last month plus for sushi is so often I'll look at it and it'll be the most green name on my list. And then the next day it'll be the most red name on my list. And it just goes in extreme volatile conditions in both directions. And really megaphones all over the place. So look at this daily time frame. We can even go up to down to the 12-hour for a little bit more clarity, but we had essentially I'm going to quickly draw here so it's going to be a little bit sloppy, but essentially a 12-hour megaphone on a longer term time frame. This is a really nice downtrending support line to be keeping an eye on. It's been coming into play for the entire month of September. But not only do we have that kind of big picture megaphone going on, we now have a mini megaphone inside the bigger picture megaphone. Let's go to the 4-hour. And if just looking at the 4-hour, I can see, okay, bull break straight into significant consolidation. We had a bear break straight into a significant bounce. So we've got a small megaphone within a larger megaphone and plenty of volatility. You know, if you're looking for day trade, as I just mentioned, maybe Bitcoin's tightening up and we don't want to be day trading Bitcoin and some of the larger coins that are tightening. But a name like Sushi gives us such significant moves in both directions. If I'm looking for a day trading vehicle, that's definitely something I want to be comfortable with. 40% up. That can't be. Yeah. Wow. That's even more than I thought. 40% up straight into 14% down, which is great volatility for day trading. Sushi BTC has been a bit all over the place as well. And again, it's in a megaphone, bull break, straight into a bear break, straight into a bounce. And when we get choppy and unclear, we know to be scouting megaphones. We're going to be watching for an equilibrium here. We are looking for a 4-hour high or low, but the size of the pullback, we then have to be watching for the potential that it leads to a lower high from there. And Sushi on the Trader Pro, we've got same thing, super stacked on the hourly time frame, leading to great entries for big time bull moves. This most recent one was right near that bottom. And again, this is just the kind of thing where, you know, what signals do I want to be looking at? It's just very easy to scroll around and put up these different alerts to see what's been firing. We can say, okay, the back burner hasn't been happening on the hourly time frame anytime recently because we are not breaking out. We can look at when has overbought and oversold climaxes stood out. Let's say I'm a day trader, zoom into the 15-minute time frame. So it signaled down here on the flush, got to extreme conditions, led to 15-minute consolidation before continuation. So as far as back testing goes, it's nice to just be able to visualize and look back and see, okay, which alerts have been working and which ones have not, because they will constantly be shifting as to our go-tos depending on the market environment. There was a while there where it was all back burners. And then once weekly consolidation started, back burners are out the window. And now we're just watching overbought, oversold climax as far as what I am personally watching as the most useful signals in this current market environment. Litecoin, got to check in on it because, again, it's just the ideal bear. And a lot of people like to hedge in crypto. Let's say I'm long Bitcoin and Ethereum. Shorting Litecoin is the way to go, just as far as playing the stronger names bullish and the weaker names bearish. We already broke to a daily lower low. Granted, no bear follow through, but the LTC BTC chart is just in slow fade mode. And after the shenanigans of the Walmart rumors, it's just been nothing but bears taking back over. And again, a go-to. Whether you're a day trader or a swing trader, whatever it is, you want to know who is stronger and who is weaker. And if I'm looking at Bitcoin showing me a bullish setup, I'm looking to play the stronger names. And if looking at Bitcoin showing me a weaker setup, I'm looking to play the weaker names bearish. So we always want to have a couple names that are stronger and a couple names weaker that we are monitoring to have go-tos depending on Bitcoin, which again, this current setup, I want to know which coins am I playing on a bull break and which coins am I playing on a bear break of this daily equilibrium for Bitcoin. We want to have that known in advance, and certainly Litecoin is one of the bear candidates. AVAX this is one that we've been watching for potential rising wedge, keeping in mind that names that are in breakout mode have a lesser probability of rising wedges breaking bearish. But not only is it a potential rising wedge, I was watching this yesterday as well. Bulls are still in control of the daily uptrend, but we're cautious of a 12-hour rising wedge and a 12-hour head and shoulders. That's two bearish patterns for the price of 1. So this is the rising wedge, and I started looking for it because the bull break lacked follow through, but it's also a left shoulder, a head, and this is now a potential right shoulder forming. So if we fail to break 79.80 and drop back down and break 61.59, we confirm the head and shoulders and we confirm the rising wedge both at the same time. And what that would look like on the daily is a daily higher low set in this clear uptrend, but the size of the pullback leading to a lower high and then a confirmed daily downtrend into weekly consolidation. So that's just something I'm keeping an eye on for a potential loss of momentum for the bulls. And checking in on the BTC pairing. Is the BTC pairing showing us weakness relative to the US dollar pairing? No, it's doing the same thing. So we can't look at this and say, there's a clue there, watch the bears, because it is doing the same thing. But the gains for the bears will be notable if both pairings confirm these patterns at the same time, losing the daily uptrend, losing daily EMA 12, and shaping up for weekly consolidation. So another pattern to just keep an eye on and see how it plays out if we do indeed set a daily lower high. This is another pattern where Bitcoin daily equilibrium would need to break bearish if I were going to have confidence in follow through. Because if the Bitcoin daily equilibrium breaks bull, I'm not going to have a whole lot of confidence in any kind of bear break follow through on AVAX. So ideally, I want to be looking in the direction that Bitcoin is going to break this daily equilibrium. All right, getting back into the flow of things after being away from the charts a good bit the last few days. Feel free to ask any questions. I appreciate you watching, and we'll continue to watch this daily equilibrium on Bitcoin very closely as it shapes up for a break end of this week, perhaps. And we could sit in here another few days. Start of October, certainly watching for a break. Do good things.